Welcome to Discovery Depot YT, your go-to channel for deep dives into the world of technology and finance. In today's video, we're exploring a hypothetical scenario that could shake the global financial system. What would happen if major banks adopted cryptocurrencies as reserve assets? Don't forget to subscribe and hit the bell icon so you never miss out on our latest content. All right, everybody, buckle up, because tonight we're talking about something truly wild. Banks using cryptocurrencies as reserve assets. Yes, you heard that right. Those stuffy institutions with more rules than a board game convention might start messing around with the Wild West of finance. Now, before you start envisioning a dystopian future where every ATM dispenses Dogecoin, let's take a deep dive into what this actually means, because honestly, it's complicated. Like trying to explain crypto to your grandparents on Thanksgiving complicated. But don't worry, we're here to break it all down for you, in a way that even your pet goldfish could understand. First, we'll cover the basics. What are reserve assets, and why do banks need them? Then, we'll delve into the wacky world of crypto, exploring its meteoric rise, and the potential implications of it becoming a mainstream financial player. Spoiler alert, it's a mixed bag, folks. So, grab your thinking caps, or your tinfoil hats, depending on your level of cynicism, and let's get started. Imagine banks as giant, overly regulated piggy banks. They hold on to your money, promising to give it back when you want to buy groceries, a new pair of shoes, or that inflatable T-Rex costume you've always dreamed of. But here's the catch. Banks don't actually keep all your money in their vaults, just sitting around collecting dust. That would be silly and wildly inefficient. Instead, they keep a certain percentage of it readily available, known as reserve assets. These are safe and easily accessible assets that banks can quickly convert into cash if needed. Think of reserve assets as the financial equivalent of keeping some cash under your mattress. It's not your primary spending money, but it's there in case of emergencies or unexpected expenses. For banks, reserve assets provide a safety net to handle sudden withdrawals, ensuring they can meet their financial obligations without collapsing like a house of cards. Traditionally, these assets have been things like government bonds and gold, stable, reliable, and about as exciting as watching paint dry. But now, cryptocurrencies are knocking on the door, demanding a seat at the grown-up table of finance. And trust us, things are about to get interesting. Remember when you could buy a pizza with Bitcoin? Pepperidge Farm remembers. Those were simpler times, my friends. Back then, cryptocurrency was the Wild West of finance, a digital playground for tech enthusiasts and speculative investors. But in recent years, something strange happened. Cryptocurrency, particularly Bitcoin, started to grow up. It gained traction as a legitimate form of payment, attracting the attention of major companies and even governments. Suddenly, everyone from Elon Musk to your grandma was talking about it, although your grandma probably still thinks it has something to do with those collectible Beanie Babies. But what is it about cryptocurrency that's so alluring? For starters, it's decentralized, meaning it's not controlled by any single entity like a government or central bank. This appeals to folks who distrust traditional financial institutions or live in countries with unstable currencies. Plus, transactions are generally faster and cheaper than traditional banking, especially for international transfers. And let's not forget the potential for profit. Cryptocurrency has made some early adopters very, very wealthy. And while its volatility can be terrifying, imagine riding a roller coaster built by a caffeine-fueled squirrel, it's also what makes it exciting for risk takers. Let's address the elephant in the room: volatility. Cryptocurrency prices are about as stable as a newborn giraffe on roller skates. One minute they're soaring, the next they're plummeting. This volatility makes cryptocurrency risky for reserve assets. Imagine a bank relying on Bitcoin, only to see its value plummet overnight. It'd be like building a house on a foundation of jelly. Proponents argue volatility is a growing pain. They believe price swings will lessen as the market matures. Increasing institutional adoption shows it's becoming more established. Is cryptocurrency a ticking time bomb or the future of finance? Frankly, nobody knows for sure. And that's what makes this so interesting. Section 5, Interest Rates and Inflation. Could crypto really be in control? Okay, let's talk monetary policy, folks. It's not exactly the sexiest topic, we know. It's basically the financial equivalent of watching paint dry while listening to elevator music. But it's important to understand how cryptocurrencies could shake things up if they become mainstream reserve assets. See, central banks use tools like interest rates and reserve requirements to control the money supply and keep inflation in check. It's a delicate balancing act, like trying to juggle chainsaws while riding a unicycle on a tightrope. Cryptocurrencies, being decentralized and beyond the control of central banks, throw a wrench into this whole system. If banks start holding significant amounts of cryptocurrency, it could potentially diminish the effectiveness of traditional monetary policy tools. Imagine trying to steer a ship when the rudder is connected to a bunch of unpredictable, decentralized crypto whales. It'd be chaos. Now, some argue that this could be a good thing. They believe that removing central banks from the equation could lead to a more stable and equitable financial system. Others, however, are less optimistic, fearing that it could lead to increased volatility and uncertainty in the global economy. Section 6. Decentralized Dreams. Reimagining finance with crypto. Look, we all hate dealing with banks, right? The fees, the paperwork, the feeling that they're judging you for that questionable purchase you made at 3 a.m. We're not judging, we're just saying. Proponents of cryptocurrency believe it has the potential to revolutionize the financial system, making it more accessible, efficient, and equitable for everyone. Imagine a world where you can send money across borders instantly with minimal fees, where you have complete control over your financial data, and where financial services are available to anyone with an internet connection, regardless of their location or credit score. This is the utopian vision that many cryptocurrency enthusiasts envision. And while we're not saying it's going to happen overnight, it's certainly an intriguing possibility. Cryptocurrencies, with their decentralized nature and innovative technology, have the potential to disrupt the status quo and create a more inclusive and efficient financial system for everyone. But, and this is a big but, there are also significant challenges and risks that need to be addressed before this utopian vision can become a reality. Section 7. The dark side of the Bitcoin risks and challenges. Time for a reality check. While the benefits of cryptocurrencies are undeniable, there are significant risks. It's like that friend who seems amazing but has weird quirks. Not great. First, regulation issues. Cryptocurrencies exist in a legal gray area, complicating guidelines and preventing illicit activities, and the security risks. Exchanges are prime targets for hackers, and losing your wallet can be devastating. Then, the environmental impact. Bitcoin mining requires enormous energy, contributing to greenhouse gas emissions. Finally, scalability issues. Transactions can be slow and expensive, making them impractical for everyday use. Section 8. Crypto's uncertain future. A gamble for global finance? So, what's the verdict? Are cryptocurrencies the future of finance, poised to revolutionize the global economy? Or are they a risky and speculative bubble waiting to burst, potentially taking the entire financial system down with them? Honestly, nobody knows for sure. It's like trying to predict the weather a year from now. Even the experts can only make educated guesses. The truth is, cryptocurrencies are incredibly complex and constantly evolving. While they offer potential benefits like increased efficiency, transparency, and financial inclusion, they also pose significant risks and challenges related to volatility, regulation, security, and environmental impact. Whether or not major banks adopt cryptocurrencies as reserve assets remains to be seen. It's a gamble with potentially huge implications for the global financial system. One thing's for sure though, it's going to be a wild ride, so buckle up, grab your popcorn, and let's see how this whole cryptocurrency experiment plays out. It's going to be interesting, to say the least.